Welcome back to the channel. I'm your host, Financial Climbs, and today I'm going to take you all through three stocks that Nvidia has been secretly buying themselves. Next, I'm going to take you through each of the companies and their current price, where analysts think the price will be in a year's time, and just how much Nvidia are holding on to. Now, the first stock I have for you is Applied Digital Corp, ticker APLD. Nvidia initially invested in them with approximately $25 million at around a price of $3.24. As of today, with the stock trading at $10.38, which you can see here on the chart. This is more than 3 times a return in under a year, which has meant that their stake is now up to $80 million. So what does that mean for us at the moment? Well, as you can see on the year chart, we've had a recent spike just towards the end of May here from $7 all the way up to 13. And during the last month as well, we've seen 36% growth, guys. What we've also seen though is that was at the start of the month, and really we've just been seeing this accumulation going on for the majority of the month. If we have a look at what the analysts are saying about it, we can see that the forecasts are very bullish. As you can see, the average of the analyst ratings is currently a strong buy. We're currently sitting at a price of $10.38, but even the minimum price guidance is around $12, an average of around 14, with a max of 18. That's with 9 analysts offering price predictions 1 year out. So looking extremely bullish right now as one of Nvidia's own investments. Let me know what you're thinking, whether you're looking to buy this as well. Be great to hear from you. So next up, I have ARM Holdings for you, ticker ARM. Now, in early 2024, Nvidia disclosed that they'd made a £147 million investment in the company just after its IPO. And now, with ARM trading at $165, their current position is worth approximately £182 million. That's about 24% up from where they bought it. Now, what does that mean for us? Looking at the 1 year chart, first of all, we can see that there's been sort of ups and downs with ARM this year, and really it's the latter part of the year has been climbing from April through May, June, and into July, from lows of 85 all the way up to 165. So a very impressive last few months, but the year really has been fairly stable. Looking at the 1 month graph, we can see that the price has been steadily on the increase. So what do the analysts make of it? Well, they have an analyst rating of buy on this, so it's a modest one. 40 analysts have given ratings to ARM over the last 3 months, so it's certainly caught the attention of many. What we can see though is that of the 31 analysts, we had an average price target of 140. That's down 15% from where we are at the moment. And I guess from here as well, you can see naturally we are at the top of the resistance, really, or close to it for the year. We can see that the average is down 140 with a minimum down at even 80 at the moment, guys. But there is still some more upside for some analysts who think this hasn't quite got to the potential that it can. Obviously, a lot of weight is placed on it with the AI boom and with Nvidia's own personal interest. We can also see that despite the looming price targets, that actually of all the analysts, the large majority still consider it a strong buy. So something definitely not to be overlooked. I'd love to hear from you. Let me know what you think. Now, I've saved the most interesting for last, and that is CoreWeave, ticker CRWV. If you recall, 3 weeks ago, I made a video on this when it was down at $120, and now we're seeing price action up at 160. What's the story behind it? Well, Nvidia first invested 100 million into CoreWeave back in April 23 when the share price was only $5.50, and then later added another 250 million at $40 a share, guys, bringing their total investment to 350 million. Today, with CoreWeave trading at $160 and Nvidia holding 24 million shares, their stake is now a staggering 3.87 billion, guys. You heard that right. That's more than an 11x return on their initial capital. So looking more closely at their graph then, we've got the all-time here, and my initial video was back around this stage when we were looking at 120 and it was consolidating, and it has continued to move higher. Now they have quite a large debt ratio, and that's where there are a lot of concerns for analysts, which we'll come on to in a moment. But just looking at the last month, we can see some real consolidation here. But whether that's consolidation to go down or up, for me, it is still looking bullish, but that's just my own view on the stock. Let's see what the analysts and specialists are saying. Well, we can see that 21 analysts have covered the stock in the last 3 months, with the current price at $160. We can see the large majority are averaging sort of around $84 here, which is quite a steep decrease, almost 50%, with a worst case scenario down even at 36. Some have remained bullish though, and don't see 159 as the kind of top of the price range, and have estimated a price increase of $185. We did, of course, very recently see it almost touch that, but you can see where they have their concerns. It's been very volatile and has climbed very quickly over the last 3 months. Despite the negativity here, guys, you can see that there is still, out of all the analysts, 6 still rate it a strong buy, but you can see that the majority are tentative here, with 13 holding and a couple saying sell. Again, I mentioned some of the concerns here around the significant debt that they are in, which will certainly play a role when people are making their estimates. That brings us to the end of today's video, guys. I hope you found it useful. If you did, don't forget to smash that like button, subscribe for more videos, and don't forget to comment below. I'd love to hear whether you found these useful and what stocks you'd like me to cover next. That's it for now. I'll see you on the next one.